All right, so we're diving into Shell's 2023 performance. We've got their annual report, pretty hefty, but it's our roadmap for this deep dive. You'll get a clear picture of their business segments, their financials, and their plans for shareholders. We're talking energy security, sustainability, and yeah, a lot of numbers.
The interesting thing is how Shell is trying to balance the traditional oil and gas side with the push for a lower carbon future. It's a tightrope walk for sure.
Yeah, it really is. And you can see it even in their business segments. It's not just drilling and pumping anymore. They're in marketing, chemicals, even renewables.
Exactly. To understand their strategy, we need to break down these segments. They show where Shell is placing their bets for the future. Let's start with upstream. That's the heart of their traditional business, oil and gas production.
Okay, so upstream is all about those raw materials, getting them out of the ground. But the report says they want to keep liquid production flat while lowering emissions. How is that even possible?
It's a challenge. Some critics even say it's contradictory, but Shell says global energy demand is rising. Cutting production too quickly would be bad for energy security, so they're focusing on efficiency, reducing flaring and investing in things like carbon capture. To mitigate emissions, they even have a gas-to-liquids plant in Qatar. It can produce 140,000 barrels of oil equivalent per day. Gives you a sense of the scale.
It's huge. Seems like they can't just abandon oil and gas overnight. What about the other segments, the ones focused on the energy transition?
That's where things get interesting. Downstream, that includes refining, marketing, and chemicals, is going through a big change. They're decreasing sales of traditional oil products, shifting to lower carbon alternatives. It's risky, but shows they're serious about adapting.
So they're actually changing what they sell, not just talking about it. What are some examples?
Think electric vehicle charging. They opened the world's largest EV charging site in China last year. It shows they're not afraid of new markets. They're also looking at biofuels, sustainable aviation fuels, biodegradable plastics, trying to anticipate consumer demand.
Smart. It's like future-proofing. And the renewables and energy solutions arm, are they all in on wind and solar?
That segment is growing fast, focusing on biofuels, hydrogen, wind, and solar. But they're also realistic. They know dismantling the current system too quickly could be bad for energy security. So they see things like LNG as a bridge fuel. It's still fossil fuel, but it burns cleaner than coal, gives them time to scale up renewables.
It's a lot to juggle. I see why the report is so long. All this must be costing a fortune. What does their financial performance look like?
Let's get into the numbers. 2023 was a bit of a roller coaster. Ups and downs, earnings were strong, but cash flow from operating activities actually decreased compared to 2022.
Wait, how can earnings be up while cash flow's down?
Good question. It shows why you need to look beyond the bottom line. A lot of factors contributed. Lower gas and power prices impacted their trading, and changes in working capital. Earnings show profitability. Cash flow shows how much cash is coming in and out. You can have strong earnings, but still see a dip in cash flow.
Okay, that makes sense. But does that mean they're struggling?
Not really. This is where we talk about free cash flow. Many investors think it's even more important than cash flow. It's the cash left over. After they cover all their expenses and investments, the money they have to reward shareholders or invest in new opportunities. In 2023, their free cash flow was $36.5 billion, down from last year, but still significant. It shows they're generating enough cash to keep things running and invest in the future.
Okay, that's reassuring. But what about their debt? Are they taking on huge loans to fund these new ventures?
Actually, they've managed their debt well. Net debt, meaning total debt minus cash on hand, actually went down in 2023. And their gearing, the ratio of debt to equity, stayed pretty stable. This suggests they're not over-leveraging, which is good for their long-term health.
So financially, they seem to be in a good place. But what about shareholder value? That's what drives investment.
Shell knows that keeping shareholders happy is key. They're committed to returning cash to shareholders through dividends and share buybacks. In 2023, they returned $29.9 billion. A serious commitment. Shows they're sharing the wealth.
Wow, that's a lot. They're taking shareholder value seriously. What factors do they consider when deciding how much to distribute?
They're balanced. They consider a lot of factors. The macroeconomic environment. A global recession would make them more cautious. They also look at their earnings, but also investment plans and existing commitments, trying to find that balance between rewarding investors now and having the money to invest in the future.
It's fascinating how they balance all of this. Seems like Shell is walking a tightrope on many fronts. We've covered their business segments and their solid financials. But what about the road ahead? What challenges do they face? in this changing energy world.
That's where it gets even more interesting. Shell is operating in a world full of uncertainty, geopolitical tensions, technological disruptions, and they acknowledge these challenges in their report. Understanding these risks is key for you to assess if they're equipped for the future.
Let's unpack those risks. What are some of the big ones?
One of the biggest is the political landscape. They operate in over 70 countries, many with political instability. That means regulatory hurdles, potential resource nationalism, even safety concerns for employees. Then there's cybersecurity, cyber attacks targeting their operations, social engineering scams. These could disrupt their business, damage their reputation, highlights the need for strong security.
So political instability and cyber threats are on their radar. But we can't forget about the energy transition itself. Isn't that both a challenge and an opportunity for them?
Exactly. They say the energy transition is complex and uncertain. Moving too slow could mean missing opportunities and facing pressure from investors. But moving too fast could disrupt energy markets, especially if new tech isn't ready. It's a balancing act that needs strategic foresight and adaptability.
It's a lot to manage. And speaking of risks, they mentioned concerns about their pensions.
Yeah.
What's going on there?
Ah, yes, the pension plans. Not as exciting as wind turbines or hydrogen, but important for their finances. They're concerned about their exposure to sovereign debt risks. If countries where they hold investments have economic problems, it could impact the value of those assets and their ability to meet pension obligations.
Another example of how everything is interconnected. Global politics, economics, tech innovation, social responsibility. Seems like Shell is operating in a world of constant change.
Exactly. Their ability to manage these risks will be crucial for their success. They need to be agile and adaptable, proactive in addressing challenges. It's not just about having a plan, but having the flexibility to adjust that plan as the world changes.
It sounds like sailing in uncharted waters.
Yeah.
But we've only just started our journey through their 2023 performance.
Indeed. We've looked at their business segments and financials, but there's more to discover. Next, let's dig into their growth and innovation strategies, especially in areas key to the energy transition, gas and LNG.
That sounds fascinating. Let's see how Shell is bridging the gap between today's energy needs and tomorrow's clean energy goals.
Shell sees liquefied natural gas, LNG, as a big part of this transition. It's interesting because it is a fossil fuel, but it burns much cleaner than coal.
Yeah, like a stepping stone. Until those renewable sources are ready, how big of a bet are they making on LNG?
They're going all in. Their report talks about increasing their LNG capacity, adding 11 million tons per year by the end of the decade. That's like adding a small country's entire LNG production.
Wow, that's huge. What's driving their confidence in LNG?
A few things. Countries want to reduce their use of coal, and LNG is a cleaner option. Also, global demand for natural gas is expected to grow, especially in emerging economies, and Shell thinks they can use their expertise in gas production and transportation to become a leader in the LNG market.
To taking their strengths and applying them to this new energy world. But it's not just about producing more. They also want to make the whole process more sustainable, right?
Yeah, for sure. They're investing in new technologies for liquefaction, transportation, regasification, all to minimize emissions and improve efficiency. They're even looking at using renewable energy to power some LNG facilities.
It's amazing how they're combining their size with innovation. But we can't forget about their oil business, the other part of upstream. How do they plan to keep producing oil and address those environmental concerns?
It's a balancing act. They know they need to make oil production more sustainable. They're focusing on things like energy efficiency, reducing methane emissions, and exploring carbon capture and storage to trap emissions underground.
Sounds like a multifaceted approach, getting the most out of their existing assets while also being responsible. Let's move to downstream now, where they turn those raw materials into products. It's the other side of the coin.
It is a complex part of their business. It's changing a lot as they adapt to the energy transition. They're not just refining oil and gas. They're making a bunch of different products, fuels, lubricants, chemicals, even plastics.
And I bet they're making big changes there too, with the focus on sustainability.
You're right. They're putting money into advanced refining technologies to make cleaner fuels and developing new bio-based feedstocks. For their chemical production, they're also expanding their lower carbon products, like sustainable aviation fuels and biodegradable plastics.
So not just cleaning up old processes, but creating new products for a sustainable future.
Right. A key part of their downstream strategy is circularity, finding ways to recycle and reuse materials, reducing waste and their environmental footprint. closing the loop on their products, turning waste into resources.
That's interesting. A closed-loop system where nothing is wasted. But how does marketing fit into all of this? They're a global brand. Their image is connected to their environmental performance.
Marketing is super important, especially now as they change. They need to communicate their commitment to sustainability honestly and transparently, building trust with consumers who are skeptical. They're using their retail stations to promote their lower carbon products and services, like EV charging and biofuels.
Oh yeah, I've seen those ads more and more.
Yeah.
But it's not just traditional advertising, right?
No, they're also investing in digital marketing, social media, and online platforms, reaching people where they are, on their phones, online, or at the gas pump.
It's a smart strategy in
Why?
today's digital world. But let's talk about something else important, the human side of their operations. Social responsibility, diversity, human rights.
That's really important. Behind the numbers are real people, both within the company and in the communities they work in. Shell is facing more scrutiny on these issues, and they're trying to show their commitment.
What are they doing?
They have goals to increase representation of women and underrepresented groups in leadership positions. Women in senior leadership grew to 32% in 2023. They also have programs for a more inclusive workplace. They know diversity brings new perspectives that can make their business stronger.
That's good to see. But it's not just about internal policies. Their operations affect communities around the world.
Absolutely. They work with suppliers to make sure labor practices are fair and that materials are sourced ethically, trying to get rid of human rights abuses that happen in global supply chains. They also work with communities directly to address social and environmental concerns, investing in community projects, and supporting things that benefit local people.
It sounds like they're trying to be more proactive
Yeah.
and transparent in their social responsibility. They know their success depends on being ethical.
Right. They've had their share of criticisms in the past. No company is perfect. But what matters is how they respond and learn. They're actively trying to fix things, improve their practices, and build trust.
It's a journey. It's good to see them acknowledging their shortcomings and working to improve. But with all these moving parts, how is Shell governed? Who's steering the ship?
That's a good question, especially for a company this big. Shell has a long history of corporate governance. A board of directors oversees their strategy and performance. But they've had challenges and criticisms, especially after past controversies.
So how are they addressing that
Yeah.
and making sure they operate ethically?
They've implemented stricter compliance programs, strengthened their internal controls, and appointed a chief ethics and compliance officer. Shows they're committed to ethical standards. They've also made changes to their board, adding members with expertise in sustainability and ethics and risk management. They know it's important to have diverse perspectives and independent oversight.
Those changes are good. It shows they take governance seriously. It's important for public trust. But the energy industry is risky. How are they managing those risks, especially when it comes to safety?
That's super important. It gets a lot of attention. They work in tough environments. Deep water drilling, remote oil fields, accidents happen, and they have happened to Shell before, with terrible consequences. So they're taking steps to prevent that and minimize their impact.
Like what specifically?
They have stricter safety protocols, invested in new tech to monitor operations, and created a culture of safety. Everyone needs to prevent accidents. They've also set targets to reduce incidents, and they're tracking their progress closely.
Good to see that focus on safety. But what about the environment? They're extracting, refining, transporting fossil fuels. That affects the environment.
They know that. They're working to reduce their impact. They're reducing greenhouse gas emissions, investing in renewable energy, and exploring carbon capture and storage to offset their carbon footprint. They also want to minimize their impact on biodiversity, protecting ecosystems and restoring habitats.
A lot to juggle. It seems like Shell is facing a lot of challenges, trying to balance their business with a lower carbon future. But they're also talking a lot about innovation. How are they approaching that?
They think innovation is key for their survival. They can't keep doing things the same way. They need to embrace new technologies, develop new solutions, and adapt to a world that wants clean energy.
So what are they doing to encourage innovation?
They've increased their R&D investments, spending a lot on new tech and solutions. They're looking at a lot of different areas: renewables, carbon capture, hydrogen, biofuels. They're also investing in digitalization and AI to be more efficient and reduce emissions.
Sounds like they're covering all the bases, not just one solution. But innovation isn't just ideas. It's about making those ideas work in the real world. How is Shell doing that?
They're doing a few things. They're partnering with startups and universities, getting new ideas from outside. They're buying innovative companies, bringing in new tech and expertise, and they're creating innovation hubs, spaces for their own employees to collaborate and experiment.
An ecosystem of innovation, both inside and outside their company. But Shell is a huge company, working in over 70 countries. That must be hard to manage.
It is. Their global reach is good and bad. It gives them access to resources, markets, and talent, but they have to deal with regulations and politics, and social and cultural differences.
It's a balance. They need to be sensitive to local concerns, build relationships, and operate responsibly.
Exactly, and they need to do all that while being safe, sustainable, and respecting human rights.
How are they approaching those challenges and making sure they operate ethically?
They've learned how to manage risk, adapt to local situations, and work with people in different parts of the world. They have teams focused on each region, and they work closely with communities and governments and NGOs to make sure their operations fit local needs.
They're trying to be more than just a company, a responsible global citizen. But in today's world, companies are under a microscope. Communication is so important. How is Shell doing that?
It's really important. They need to be more transparent, more responsive, more willing to listen to concerns from investors, customers, employees, communities, governments.
Moving away from that old school top-down communication style.
Exactly. It's about building relationships, not just giving out information. They have regular meetings with investors and communities. They go to industry events. They use social media. They're trying to be proactive.
It sounds like it.
Yeah.
But how are they making sure their message gets across?
They use a lot of different channels to reach different people. Traditional media, social media, digital platforms. They publish sustainability reports, talk about their emissions, outline their commitments. They even do surveys and focus groups to get feedback.
A lot of different ways to communicate, being transparent and open to dialogue. But let's go back to the numbers for a minute. What does their financial performance tell us about their future?
Let's see. 2023 was a mixed bag for Shell. They did well when oil and gas prices were high, but then prices went down, which hurt their earnings later in the year.
A bit of a roller coaster.
You could say that. Their earnings were up a lot from 2022, but their cash flow from operations was lower because of those price changes. And the timing of some investments. It's important to remember, cash flow and earnings aren't always the same.
I see. But what about their free cash flow? The cash left over after expenses and investments.
Their free cash flow is good. $36.5 billion, lower than 2022, but still a lot. They can fund their operations, invest in new projects, and pay their shareholders.
That's good. They're managing their money well. Speaking of shareholders, how are they keeping them happy?
Shell is known for paying dividends. They always return cash to shareholders. In 2023, they paid out $29.9 billion in dividends and share buybacks.
Wow. How do they decide how much to pay out?
A lot of factors. Earnings, future earnings, the economy, their investment plans, and what they already owe. It's a balance. They want to reward investors, but also have money for the future. Their goal is to pay out about 30% of their cash flow from operations.
That's a lot. They're serious about shareholder returns.
Yeah.
But let's talk about safety. The energy industry is risky. Shell needs to operate safely and protect the environment.
You're right. Safety and the environment are really important for Shell. They work in some of the most challenging places. Accidents can be really bad. They've had accidents before, which showed them how important safety is.
What are they doing to get better?
They have stricter safety rules, new technology to monitor things, and a culture of safety. Everyone is responsible. They also have goals to reduce accidents, and they track their progress and publish their safety data.
That's good. But what about the environment? Extracting fossil fuels has an impact.
They know. They're working on it. Reducing emissions, investing in renewables, looking at carbon capture. They're also trying to protect ecosystems.
Sounds like they're taking it seriously. Let's talk about innovation now.
Innovation is essential for Shell. The energy industry is changing fast. Technology, consumer preferences, climate change. They can't just wait. They need to innovate.
What are they doing?
They're investing more in R&D, looking at new technologies, renewables, carbon capture, hydrogen, biofuels, and they're investing in digitalization and AI.
They're exploring a lot of options.
Yeah.
But how do they take those ideas and make them a reality?
They have different approaches. They work with startups and universities. They buy innovative companies. They create innovation hubs for their employees.
An ecosystem of innovation. But Shell is a global company working in so many different countries. How do they manage that?
It's a challenge. They have to understand different regulations and politics and cultures.
It's a balancing act. They need to be sensitive and build relationships.
And be responsible, while being safe, sustainable, and respecting human rights.
So how do they make sure they operate ethically everywhere?
They're good at managing risk. They adapt to local situations. They work with local people and organizations.
Sounds like they're trying to be good global citizens. But communication is also really important these days. How are they engaging with people?
Communication is crucial. They need to be more transparent and responsive and listen to concerns from everyone.
A more open and collaborative approach.
Yeah. It's not just about giving information. It's about building relationships. They meet with investors and communities. They go to events. They use social media.
It sounds like they're trying. But how do they make sure their message is heard?
They use all sorts of channels to reach different people. Media, social media, online platforms. They publish reports, talk about their emissions, their commitments. They even do surveys.
So they're trying to be more open. But let's get back to the numbers for a second. We talked about their financial performance. What does it tell us about their health?
Okay. 2023 was interesting for Shell financially. High oil and gas prices early in the year helped, but those prices dropped later.
So up and down.
Yeah, their earnings were up a lot from the year before, but their cash flow was down. It's important to remember those are different things.
Right. What about free cash flow?
That was good. $36.5 billion. Enough to run their business, invest, and pay shareholders.
That's reassuring. And they're paying out a lot to shareholders too, almost $30 billion. How do they decide how much to pay?
They look at a lot of things: earnings, the economy, their plans for the future. They want to reward investors but also invest. Their target is 30% of their cash flow.
That's a big chunk. But what about safety and the environment?
Those are top priorities. Accidents can be really bad, so they're working to prevent them.
Oh,
Stricter rules, new technology, a safety culture. They also track their progress and publish their data.
that's good to hear. But what about their impact on the environment?
They're working on that too, reducing emissions, investing in renewables, carbon capture. They're also trying to protect biodiversity.
Sounds like they're taking a multifaceted approach. But let's talk about innovation again.
Sure, innovation is essential. The energy world is changing. Shell needs to adapt.
So how are they doing that?
More R&D, new technologies, renewables, digitalization.
A lot of different areas.
Mm.
But how do they turn ideas into reality?
Partnerships, acquisitions, innovation hubs.
It sounds like a comprehensive strategy. But being a global company adds complexity.
It does. They have to understand different places and operate responsibly everywhere.
It's a big challenge, and communication is key.
Absolutely. They need to be transparent and responsive and listen to stakeholders.
So more open approach to communication
Right. It's about building relationships.
and using different ways to communicate.
Exactly.
Well, we've covered a lot of ground here. Shell's 2023 performance was a mix of good and bad, but they seem to be moving in the right direction.
They are. But the energy transition is a long process.
It is, and we'll continue to watch Shell's journey.
They're taking a multi-pronged approach, recognizing that there's no one-size-fits-all solution to innovation. They're creating partnerships with startups and universities, tapping into those external sources of innovation and fresh thinking. They're acquiring innovative companies, bringing those technologies and expertise in-house, and they're establishing dedicated innovation hubs, creating spaces where their own employees can collaborate, experiment, and develop new ideas.
It sounds like they're trying to create an ecosystem of innovation, both within their own organization and through collaborations with external partners. But with all these moving pieces and this massive global footprint, how does Shell ensure they're making responsible choices? What about their governance structure and leadership?
Good governance is absolutely crucial for a company like Shell. They have a board of directors responsible for overseeing strategy and performance, making sure they're operating ethically and responsibly. They've faced criticisms in the past, which has led them to strengthen their compliance programs, internal controls, and board composition.
So they're trying to learn from those past experiences and create a more robust and transparent governance structure.
Exactly. They're adding board members with expertise in areas like sustainability, ethics, and risk management. They're also engaging with external stakeholders to get feedback on their governance practices and identify areas for improvement.
It's like they're creating a system of checks and balances to ensure they're operating ethically and responsibly at the highest levels. But beyond those internal measures, what about their external impact? How are they engaging with the communities where they operate and addressing those broader social and environmental concerns?
That's a key area of focus for Shell. They're trying to move beyond just minimizing harm and towards creating a positive social and environmental impact. They're working to support community development, invest in social programs, and create economic opportunities in the regions where they operate.
It's like they're recognizing that they have a responsibility not just to extract resources, but to contribute to the well-being of those communities.
Precisely. They're also working to reduce their environmental footprint, investing in renewable energy, improving energy efficiency, and exploring technologies like carbon capture and storage to mitigate their impact on the climate.
So they're trying to address those social and environmental concerns in a holistic way, recognizing that their long-term success is intertwined with the well-being of the planet and the communities where they operate. But amidst all these initiatives and challenges, let's not forget about the bottom line. We've talked about their financials, but what does the future hold for Shell's business model and its long-term prospects?
Shell is clearly at a crossroads. They're trying to balance their legacy oil and gas business with their aspirations for a lower carbon future. The success of their transition will depend on a multitude of factors, from global energy demand and technological advancements to government policies and consumer preferences.
It's like they're navigating uncharted waters, trying to chart a course through a complex and ever-changing landscape.
Exactly. Their ability to adapt, innovate, and execute their strategy effectively will be crucial. They'll need to make tough choices, invest wisely, and manage risks carefully. The energy transition is a marathon, not a sprint, and Shell is just starting to hit its stride.
It's a fascinating story, and we'll be watching closely to see how it unfolds. So as we wrap up this deep dive into Shell's 2023 performance, what key takeaways should our listener keep in mind?
First, Shell is a company in transition trying to balance its traditional business with its aspirations for a lower carbon future. Second, their financial performance is solid, giving them the resources to invest in that transition. Third, they face numerous challenges from political instability and technological uncertainties to social and environmental pressures.
It's a complex and multifaceted picture, full of both opportunities and risks. But ultimately, Shell's success will depend on their ability to adapt, innovate, and execute their strategy effectively. And for you, the listener, this deep dive has provided a glimpse into those complexities and a foundation for understanding Shell's journey in the years to come.